Hello everyone, welcome to the channel of Skyboxpips. So in this video, I'll be doing a gold trade breakdown for NFP week. So before we begin, please click the like button. Please click the subscribe and notification bell so you can be notified when I release future content on this channel in the near future. And also in the description below, I'll be including my Telegram link so you can have access to my free Telegram where I send possible trade setups, updates on what's going on in the community, and you're able to interact with other members within the community and ask me questions. So let's get back to the video. So here we have the gold chart open. So we have gold versus the USD 5-minute chart, right? So each candle on this chart represents a 5-minute session between the bulls and the bears, right? So for instance, here on this green candle, that means that the bulls has won that session. And for the red candles, that means that the bears has won that session. So technically it's like a 5-minute tug of war, right? So today's was February 4th, 2022, which is the first Friday of February. And usually on the first Friday, we can anticipate high impact news releases such as non-farm payroll. So the website that I use to look up news releases is myfxbook.com. Right. So I click on go to economic calendar. Right. And here we'll see the schedule of all the news. So we have the date, right? The title of the news report, the currency that news report is affecting, the impact, whether it's low impact, medium impact, or high impact. So low impact means that it will have low impact on the market. Medium impact means it will have medium impact on the market. And high impact means that it would have a high impact on the market, right? And in this column, we have previous, which shows the previous numbers of the report released before, whether it was a month before or whenever they released that report in the past. Consensus means the expected figures that they anticipate the news report to be when it does release before the scheduled event, right? So here we have the check marks, which means that the news has already been released, which takes us to the actual. So the actual represents the actual data from the news when it was released, right? So let's click on, non-farm payroll for the US dollar, right? So non-farm payroll affects the US dollar. So let's click on that. And here's a summary of non-farm payroll. So non-farm payroll is a monthly employment report produced on the first Friday of every month. Non-farm payroll has a significant impact on the value of the US dollar, the bond market, and the stock market. So it's important for us to stay up to date with news as day traders so we don't get caught in sharp price movements that we did not anticipate, right? So we can avoid incurring massive losses that was not needed, and we could stay out the market, or if we were to trade, we would trade in the direction that we anticipate the news to go, right? So here for non-farm payroll, a higher than expected figure should be seen as positive or bullish for the US dollar, while a lower than expected figure should be seen as negative or bearish for the US dollar, right? So as we go back, we can see that non-farm payroll was released on February 4th at 8:30 a.m. Eastern, right? And it was a high impact news. The last report read for 510K, right? So they expected this report to release for 150K, right? Which the report actual data was 467K. So that was better than expected of what they anticipated. So therefore it was seen as positive for the US dollar, right? And then here, as we had the US dollar as our secondary currency, as the market sells, that means that the US dollar is gaining strength. Therefore, the US dollar is, bullish. But here on this chart, sales represent the US dollar increasing in value against the gold. Right? So think of it as a tug of war. So in this one candle alone for the news release, it moved for 120 pips, right? It moved for 120 pips within 5 minutes. So if you was to have a dollar lot size, for instance, you would make $120 within 5 minutes. If you was to have a $10 lot size, you would have made $1,200 roughly within 5 minutes, right? You're just using that as an example, right? So how can we catch this trade setup? So for this trade, we draw a trend line. I would draw a trend line here, right? I'll see price make a high, right? And then price will break the trend line, come back up, fail to make a higher high, right? And it will form a double top pattern, which is a bearish reversal pattern where we can anticipate sells. So as price come up and make a double top, all right, another confluence that I like to put together for these large impact, high impact news events is divergence. So as you look at the bottom of the screen, we have the relative strength index. So the relative strength index is an indicator that measures the strength of the market. So here, as we've seen price come back up to retest the 1814 level, we can see the strength of the market decreased from this high to this high. So from here to here, we've seen that sellers are entering the market. We identify divergence. We have a break of trend line. We have a double top. We have a bearish engulfing candle with candles stepping down, right? Let me see if we zoom in a little bit. We have candles stepping down, wicks, right? Wicks stepping down. So we can enter a short position. So as we enter a short position, right after engulfing candle, we put our stop loss slightly above the high. So, about a 20 pip stop loss, right? So you have a 20 pip stop loss. All right. And we see price went for about 120 pips within 5 minutes. So that alone is about a 1-to-5, almost 1-to-6 risk reward ratio. And us as day traders, we cannot avoid losses all the time. So it's vital for us to have our rewards far greater than our risks. So here we're risking about 20 pips to accumulate 120 pips. So we've about 5 times, almost 6 times our risk, right? So to put that in perspective, if you had continued holding the trade and exit once you saw this bullish reversal pattern, this bullish engulfing, you probably exit at around about 165 pips, right? So that's about a 1 to 7.5 risk to reward ratio. So you 7.5 times your risk, right? So that's beautiful for gold. And the 20 pip stop loss for gold is not that much. That's a pretty tight stop loss for gold. So that's a trade recap for, the gold trade setup for NFP for February 4th, 2022. If you haven't already, click that notification bell and subscribe button so you can be updated on future videos. And if you haven't already, joined the free Telegram channel in the description. and leave a comment if you gain any value from this video, or if you happen to catch this trade this morning. And I'll see you in the next video. Peace.